Let's get his take on the U.S. session overnight and where to from here. Hey, welcome to the program. It's good to see you there again, Larry. You probably heard that discussion, but we are talking about selling in the mega tech names, bit of a rotation happening, a little bit more interest in some of the value names, the cyclicals. How do you read the situation?
Well, like right now, it seems like a lot of catch up, and I'm not buying into the whole story today that this is a give back when you talk about gold prices and treasury market rally and yields up to 65 basis points, and also the stock market, like you had mentioned. You know, we just saw some catching up, and like markets just don't go up every day. And I think the prime example today was like Apple. I'm kind of leading the charge downward, but you know, the value stocks are still holding in there. So a lot of anomalies going on, and today is no exception, but I would not overthink it, especially, you know, you come in today, Australians wake up and see that gold was down $120 overnight, but let's face it, it's overbought, right? And treasury yields are higher, but they're back to where they were in July, you know, June and July. So it's not that big of a deal yet.
So when does it become a big deal? What would be the trigger for it to become a big deal, Larry?
Yeah, you know, that's like the trillion-dollar question. You know, you have things like rumors of Russia with a COVID-19 vaccine is successful. You have rumors that the president here in the United States is going to be able to cut capital gains taxes, and none of which hold a lot of weight, but it's enough to move the market. So I think anything along those lines that solidify that the economy is actually back on track, that we're having a V-shape or a W-shaped recovery, or we here in the U.S. we get our fiscal house in order and not continually spend money and building tremendous deficits. So I think those will be the things that will get us back on track. But right now, it just seems like the market is so confident that the Fed will continue to get way in front of any problem. And they've done that so far, not just the Fed, but around the world too. Global central bankers have gotten aggressively ahead of things. And as long as that continues to play out, people say game on with the stock market.
Yeah, okay. So talk to us about oil. I know you're keeping a close eye on oil and the crude market, you know, just for any signs that we might be seeing some sort of inflationary spark.
Yeah, you know, I'm really I'm encouraged by the oil price. I mean, I look at Brent front month trading in the mid 40s. I mean, a far cry from where it should be, like in the 60s, like it was back in January and February, but also a far cry from where it was in March and April, down in the 20s. So I think like 45 to me says like maybe we're getting our footing. I mean, the PPI that came out this morning in the U.S. Translated that you know, Brent being at 45 per barrel isn't great, but it's saying it's a turning point. We can go either way, and I just think that there's some risk premium in that price. Cancellation of cargo holds have been sliced down. Demand continues to go a little bit higher, production lower. So, you know, the cure for low prices sometimes is low prices, and that's what we're seeing. So I think that above all is the barometer for the economy, at least in the short term.
Good. We'll leave it there. Larry, it's been great to speak with you. Thank you so much. Look forward to seeing you again.
Welcome. See you. Thank you.
Larry Shover there from Efficient Advisors. He's the Chief Investment Officer.